Imagine this. You're staring at a Bitcoin chart in September 2025 and suddenly a single candlestick's range gets raided, flipping the market from bearish to bullish in a matter of hours, turning a $1,000 trade into $5,000 overnight. That's the raw power of candle range theory, CRT, a game-changing strategy that's been quietly dominating ICT circles and exploding in popularity among crypto and stock traders this year. Forget outdated indicators like RSI or MACD, CRT taps into the heart of market manipulation, where smart money raids liquidity to trap retail traders and spark massive reversals. In this video, I'll break it down step by step, sharing real-world examples from Nifty 50 and Bitcoin that could have pocketed you serious gains. Stick around because by the end, you'll have the tools to spot these setups yourself and avoid the traps that wipe out 90% of traders. Let's dive in and turn theory into profits. Let's start with the fundamentals. Candle range theory revolves around the idea that every candlestick creates a range defined by its high and low, which acts as a liquidity magnet for future price action. Psychologically, this is where big players like institutions hunt stops. They raid the low or high of a previous candle to grab liquidity, then reverse hard, leaving retail traders chasing the wrong direction. Technically, a bullish CRT setup forms at support levels on higher time frames. Mark the high and low of a candle closing at support. Wait for the next one to sweep the low and close above it. Then confirm with a market structure shift, MSS, on a lower time frame for entry. Show the Nifty 50 1-hour chart. See how, in August 2025, a candle at support had its low raided, followed by an MSS on the 1-hour chart, sparking a good rally. This isn't random, it's rooted in order flow psychology, where fear of missing out, FOMO, after the raid pushes price to the candle's high, often breaking into new highs. For bearish setups, flip it. At resistance, a raid of the high signals distribution, trapping bulls before a drop. The beauty? It works across assets because markets are driven by human emotion. Greed raids highs, fear raids lows. Now, layering in deeper technical insights, CRT shines when combined with ICT concepts like fair value gaps, FVGs, and order blocks, turning it into a high-probability reversal machine. Psychologically, traders get manipulated during the raid phase. That's the manipulation in Wyckoff's accumulation manipulation distribution cycle, where smart money fakes the breakout to induce panic selling or buying. For crypto, show the Bitcoin 4-hour chart, spot the candle at resistance where the next candle raided the high, closed below it, and formed a breaker block, leading to a massive drop as liquidity was swept. Time frame matters. Use daily or 4-hour for range identification, then drop to 15-minute for precise entry on retests. What's your take on this Bitcoin setup? Comment below if you'd shorted it. This psychological edge is key. Most traders react emotionally to the raid, but CRT pros wait for confirmation like volume spikes or MACD divergence, ensuring 70–80% win rates in backtests. Remember, not every raid is a signal. Filter with trend lines to avoid choppy markets. Advanced psychological layers, CRT exploits trader biases like anchoring, fixating on recent highs, lows, and herding behavior, where crowds pile into false breakouts only to get reversed. Technically, measure the candle's range in pips or points. A wide-range candle, over 1% of asset price, signals stronger raids as it pulls more liquidity. For stocks, show the Bank Nifty 1-hour chart April 7th. Notice the S candle's low raid at, followed by an FVG fill and MSS exploding as bulls took control.
This isn't just price action, it's market makers engineering reversals to offload positions. Pro tip, in volatile crypto like Bitcoin, pair CRT with on-chain data for conviction. High funding rates during raids scream manipulation. I've seen traders double account spotting these, but always risk 1% per trade to survive drawdowns. Wrapping it up, candle range theory boils down to spotting liquidity raids within candlestick ranges for reversal trades, blending technical precision with psychological warfare against smart money traps. Key lessons: always confirm with MSS or FVGs, use higher time frames for context, and filter with volume to avoid fakes. Apply this to Nifty or Bitcoin and you'll see consistent edges in 2025's volatile markets. Remember, trading is a marathon. Master CRT's discipline and you'll outlast the 95% who fail. It's motivational proof that knowledge beats luck every time. Subscribe to my channel and press the bell icon for more strategies like this. Comment yes if you want me to cover your stock next.